We're going to be day trading only using price action. We're looking at S&P 500 and mini futures, and we're looking at 2000 tick charts, which means every single bar represents 2000 ticks. The structure for today is a clear trading range, and this is typical when you see steep moves that don't last too long and they instantly reverse sharply. There's a big move down, big move up, big move down. They steep, they reverse instantly, and this is clearly a trading range. EMA is flat and price is swinging up and down, up and down. In this type of structure, all I can do is to draw my shortened trend lines and wait for price to create a break and a new extreme, and then I can be able to sell at the high or buy at the bottom. Right now the bias is bearish, so that means I'm not looking for longs. I'm going to be looking for possible to get a second entry short or at this key level at exponential moving average. Two-legged pullback could be a high probability setup if it happens at the proper key entry point, at the proper spot on the chart. If I'm about to sell, I want to see EMA to reject price. I want to see price to close below EMA. However, price didn't confirm it and we strongly pushed above the exponential moving average. There was no rejection of prices, and this is already indicating strong bullish momentum. So at this point on, I need to reevaluate my analysis and I have to stop looking for shorts as long as we are above the EMA. As we are pushing above the EMA, and you guys can see that price still keeps pushing above the exponential moving average, I'm abandoning the shorts and I'm starting to look for reasons to go long because price is struggling to push below EMA. And there's the new extreme, so I'm counting from this low because it's the lowest low of this entire move down. And there is a push higher. There's the first attempt to sell below this big bearish bar. EMA holds. There's a pullback higher, and there's the second attempt to sell, and EMA holds again. Alright, so can you see the difference that we pushed above the EMA instead of being below EMA rejecting price? So this is a completely different context. This is the same pattern. This is a second entry short under the wrong context. If it closed below EMA, I can go short, but it closed above the EMA. This is now a short trap. So this is a high probability setup to go long. It happened right at the open. This is the area where US stock market open and price continue working higher. As the market is pushing higher, I'm still thinking long, although the high probability setup just occurred, and I'm not going to probably take any entries right now because I'm anticipating price to get to key entry point right here or key entry point right here. That's where you're going to get most of your trades. You want to buy low or sell high. There's the prices working in this geometrical formation. There's a little spike and a channel pattern forming. You don't really need to have the spike and a channel. The important thing is you're expecting a second leg to be formed. Something like this. So this is your first target, first leg, and the second leg is generally much more flat. There's the break for this channel, and there's first leg to a new extreme, and this is now a failed breakout. Most breakouts of consolidations will fail, and this is a big consolidation. This is a trading range, and you want to fade these breakouts of these trading ranges because that's the highest probability setup. You can go long only after market will test the breakout area. You never want to go long above resistance while the market is in its breakout phase. You always want to wait for pullback, and then you can test the key level and wait for price to continue its direction. So this is the first breakout. However, I'm not going to mark this trade. This trade would have worked. This went 9 ticks, so this was quick, easy scalp. However, a lot of times when you're fading the breakout, there are 2 pushes higher, and you can be a little bit greedier when you're fading the breakout. So for that reason, I was waiting at this point on, even though it would have worked. As price pushed higher and created the second additional push, and you really are far away from EMA, and EMA acts as a magnet, and it will pull price closer to it, especially on a failed breakout when you're really expecting for price to pull back and test the breakout area. This was the first attempt for me to take the trade. Alright guys, I'm resuming the video as I'm going to prepare to take a short entry right here. And what I'm looking at is I'm looking at a break of the spike and a channel, 2 legs up. And we are quite pushing far away from EMA, and I have a 2-legged measured move up that we already passed. So let's see if we can get filled here. And looks like I've missed it. How far are we? 50, 25. We probably made a scalp and missed the entry. Alright, so I'm going to cancel order because entry has been missed. But I was looking at the failed breakout because this is a trading range, and most breakouts of trading ranges will fail. There's a break, there's a new extreme, but a lot of times I've been saying this a lot. During the failed breakout, you can be a little bit greedier than normally. You want to wait for prices to push a little bit higher from EMA. This is the 2-legged move up, 2-legged move to a new extreme, which indicates that the uptrend played out. Where above the EMA, there's a lot of room to EMA, which indicates, you know, that we're going to pull back soon. And this is a trading range. Unfortunately, I didn't get filled. It is what it is. My first attempt for the day. It happened so quickly. this could have generated a strong runner, hopefully. So we'll see how EMA will hold. Maybe the uptrend will resume, but it is what it is right now. Identifying the difference between the first push and second push comes down mainly to experience. So if you showed it here, you got your scalp, you follow the rule of a trading range. So there is nothing wrong with taking this trade. I'm going to mark it as well because we don't cherry pick. You want to follow the rules, but this is more better entry. This is more experience based because you expect these two pushes, and it's always better to be a little bit safer with those failed breakouts because this is an advanced setup. As price pushed strongly below the exponential moving average, and take a look how exponential moving average is telling me all I need to know. There was a lower high setup and we didn't get triggered below this bar. I was actually preparing to go short below this big bearish bar because this indicates that we may push lower, and failed breakout a lot of times generates strong momentum in the opposite direction. So I was expecting for price to push lower, but then we strongly pushed back above. And this is a huge negating factor. This is now a new high, first entry long, little pullback, second entry long, although this is technically like, I think this is a second entry long. It's a bit hidden, but you don't want to go long yet. You're still hovering around the key level and it's unsure whether you're going to push lower or not. You already have your break and 2 legs up for the uptrend. So as the market pushed higher and created a micro double top and instantly pushed down and again created a micro double bottom, you're now in a micro trading range and you have to adapt and trade this trading range. It is obvious that we are not pushing lower at this point on because we are bouncing off of this area. And if I take this out a little bit, you guys can see this is a new low and you have a first attempt to sell the market, pullback, second attempt to sell the market. And notice I'm not already selling this double top because we are struggling to push below the exponential moving average and we're struggling to push below the resistance that now acts as a support. So as you get a failed second entry short and it failed on this big bullish bar and you have a key level that is holding price, this is good enough indication that the momentum is truly bullish and this is a decent trade to pull the trigger here because this is a failed second entry short. You closed above EMA, big bullish bar. I'm playing the congestion, I'm playing the trading range at this point on, and price strongly pushed above. All right guys, so resuming the video as I have entered this failed breakout entry and that was quick, we got out quickly. And what I was looking at is price pushed above the main key level, this main resistance, and then consolidated. You guys can see this is a mini trading range. You have micro double top, micro double top bottom, EMA is getting flat in the middle of these bars, and this was a break above this micro congestion and big bearish bar, which ended up being a quick easy scalp. Unfortunately, the runner got out. The bias is a little bit bullish, but I have to adapt and I have to play the micro trading range as well. So I thought it was a nice scalp and luckily I got out here. And you see that failed breakout will generate the momentum in the opposite direction and price strongly push lower as the market is struggling to close below because I'm playing the short-term trading range. This is the time where I'm starting to look for a little bit of a wider uptrends, for slight uptrend structures, because we keep making higher lows, instantly higher highs. This is a bullish imbalance and we are not pushing lower. Okay, so you can play the shorter term uptrend at this point on. It can only help you, but I'm completely satisfied with just playing this trading range. I want to sell the highs here and I want to buy the lows here. You guys can see you have a new extreme and you have a first attempt to go long, failed, and a second attempt to go long, and it looked like it's going to fail. But remember, this is a small trading range now above this key level that acts as a support. I cannot go short here. This is going to be a trap. Even though we're below EMA, we're still exactly at the bottom of this micro trading range, and I cannot go short in the bottom of the trading range. So as price tick one tick higher and instantly reversed, and this is sort of like a continuation of a second entry long, this at this point on is a great trap because everybody who went short here just got trapped and they're forced to exit their positions. So this is a great entry, second entry long, 2 legs down, the support key level is holding and price is pushing higher. So at the time I had my trend line, something like this. I scratched that idea because market kept pushing higher, but as you strongly push higher here, and take a look what's happening. Every time you come from bottom of trading range, you're expecting reversal pattern above the EMA. Every time you come from top of a trading range, you're expecting reversal pattern below EMA. So we're coming from the bottom of this micro trading range and the overall trading range, the key level is holding. This is a new low and this is the first entry short, strong push above the EMA indicating bullish momentum, second entry short, failure. This is a similar pattern to this one. I'm going from the lows, I'm expecting for price to reach the tops, but the signal bar is not great. We already are close to this resistance. Had we closed a little bit lower with the more room to these highs, this would have been great entry, and this would be no-brainer, a high probability setup for me to mark. But with the signal bar and the way we are high up, I think this is getting slightly risky. You guys can see it took a little bit of time, and there was the extra confirmation, but this is already way too high up, and market's trying to push higher. I take a look here. Once again, you have a failed breakout that would have worked, but why am I not talking about fading this breakout? And I was talking about fading this breakout right here, because right now we are in a trading range, and this trading range was just being established. Okay, and after you break out above this micro trading range and you push back, you're giving a market opportunity once again to push back below this key level. But it's not happening. The support is reacting strongly, and you have a strong bullish momentum. So this is definitely a confirmation that we're not heading lower. 1, 2, 3 attempts to push lower, nothing happened. Buyers are all holding strong here, and we strongly reverse. I cannot no longer keep fading the breakouts all the way up to here. Take a look how you're working higher. I cannot fade this breakout all the way up to here. This is a top pick entry. And as the market consolidated and bounced off here from kind of like a geometrical formation, this is where I put my trend line at first. So the market keeps pushing higher, and right now we are in a uptrend. And in an uptrend, we're looking for second entry longs with the trend. There's a new high, first entry long, second entry long. However, we're so far away from EMA. I don't like taking this entry at this time yet. The market looks very weak. This is not a strong uptrend. This is still like a sloppy uptrend. So this is very hard to recognize whether the uptrend is correct. So for that reason, I'm not sure that this is the greatest entry. The way you're far away from EMA, kind of going sideways, risky trade. The market push strongly higher, and you get the same repeat pattern right here. You have a micro double top, which resets the count, and you have a first entry long pullback, second entry long. And now I'm questioning, am I going to go long, or what I'm going to do? I'm definitely not going to pick a top because EMA is pointing higher. I'm in this uptrend. The bias overall is bullish, so I'm only looking for two-legged pullbacks at the key entry points. At the time, you don't have this trend line yet because it's hard to find this trend line. So I'm just going to move it away because you may wonder why you don't go long of this trend line. At the time, you don't have this trend line. You just have a first break of this uptrend. But take a look. Bars stacked, going sideways. You're once again overall congested. And this is a sloppy uptrend. Once again, extremely hard trade to take above this full-on doji bar. And market just pushed higher and completely rallied and never looked back. So when I'm watching the price work higher like here, I'm seeing this overshoot, which a lot of times leads to breakout trend line or straight up momentum, but we keep pushing higher. As you keep pushing higher, you have to adapt. Overshoot is one-time deal, and if you have an overshoot, you expect instant pullback, breakout trend line, or straight up reversal. It didn't happen, so what I have to do, I have to adjust the trend line, and this is probably a two-tier uptrend. This is how you act when you see overshoot that keeps pushing higher and keeps pushing higher. By no means I'm still picking top. That's not what I'm going to do. EMA is strictly pointing up. This is a strictly overall bullish structure. We started the trend from here and we are working 46 points to the upside. I'm not thinking about selling. I want to buy, but I want to buy at the key entry point. I don't want to buy at the push phase. I want to buy at the correction. And this is a push phase. It's getting riskier the far away you're getting from the exponential moving average or the trend line. And take a look, you have a new extreme. You have a first entry long, little pullback lower. You get a second entry long, where at the exponential moving average, at the potential trend line, which I'm going to delete because it's getting quite cluttered. I'm going to delete as well. You have a two-legged pullback. When I was watching this, I was a little bit afraid that we are way too overdone and it's going to be a trap. Also, after such a big bearish bar, there's generally, you can expect a little momentum as well. But there's one thing that I missed, and there was this micro double bottom, which is a great indication that this is a great entry. Also, you can treat it as a little bit as well as a failed breakout below this micro congestion. And this is a small trading range. You want to fade these breakouts of these trading ranges the same way you want to right here. I want to fade it with the direction of a trend. So this is a first entry long, second entry long, decent entry. I'm ashamed that I didn't pull the trigger here, but you get tired and whatever, and you make mistakes. But great entry. It was such a small bar. It was definitely worth the risk. And the micro double bottom is a great confirmation of the bullish momentum, and market is pushing higher. So once again, I'm questioning myself. what setups I'm thinking about. I'm still thinking about a second entry longs with the trend. This is still strictly bullish uptrend. And while I'm looking for second entry longs, I'm going to draw the shorten trend lines, and these moves, this move looks like kind of two-legged move down. Same thing right here, two-legged move down. All right, so this is the two-legged pullback that you want to pay attention to. This is the high probability setup. If market does something once, it will retest and do it again. All right, so I have the shortened trend lines, and you guys can see the difference between this structure, this one, and this one. Here I have a trend line working lower that is not broken. Here I can see leg, correction, leg down, leg, correction, leg down. This is a pure one leg. So even though I have a new high, first entry long, second entry long, I'm not a big fan of going long here. And once you tick lower and instantly reverse, this is a great bullish confirmation, higher low. But this is bar quite big. You're going long at the very high of the move. You don't have a new low, slightly riskier, decent trade. However, you're expecting for price to give you a failed second entry short below this bar. You never get the trigger, must EMA holds and market pushes to a new high. Now you don't want to go long already, way too close to these highs, way too late. You have a second entry long below the EMA. At the time I didn't have this channel yet. Price was just kind of slowly choppying. It's two-legged pullback below EMA. So once again, you can make a case for going long here. Definitely not a bad entry as well. But the market is starting to look overdone. If you see this pattern, if you see this channel that is a little bit tilted, then this is a decent entry. I will actually mark it. I really didn't like it at the time because how you push below EMA. But I was expecting to jump on board on this higher low because higher low is a confirmation of a two-legged pullback. But you never get the trigger below this bar and it just pushed higher. So there is no higher low. There was no chance for me to enter. And once again, you already move way too, the higher low already is very close to these highs. You have a doji bar. So you're expecting correction and you have a new extreme. You're still asking yourself the same question. What is the bias? You look back, completely bullish bias. So I'm not thinking about selling. I have a new high, first entry to buy, pull back, second entry to buy, but I have my trend line in the way. Same thing I have here, and I'm closing below EMA. So I cannot go long here. This is a failed second entry long, but I don't want to pick top. I don't want to short in a bullish looking structure. So as I have a micro break and a new extreme, this is an opportunity for me to go long. All right, and I'm preparing my limiter as I'm going to enter this trade right here, because right now we have this downtrend, we have a micro break and a new extreme formed, and we have a big bullish bar right here in this strong uptrend. So I'm hoping I get filled. I'm just gonna chase it a little bit because I missed a bunch of good setups here. Let's see if we can get filled here. I really don't want to miss this trade. A lot of people got trapped going short here on a failed second entry long, and don't tell me we're gonna miss this trade. I'm still hoping we can get a few more ticks. Come on. We're bouncing off my channel on a 5-minute chart, which is great news. A big bullish bar on a 5-minute chart. Come on. I don't want to chase it too much because the stop loss would be way too big. A few more ticks. Come on. And we got filled. So I'm going to put my stop loss one tick below this signal bar. As you guys can see, I automatically have my target profit set in place for 8 ticks, and I'm going to go for 7 because I'm entering with the stop 1 tick that I normally enter with the close. So I'm going to just tighten it to 7 ticks, and overall bias is up. So I'm only thinking about buying and not thinking about selling. Also, there's this little tiny spike in the channel which had a break, so I'm expecting a new extreme to be formed. And we are halfway in getting filled. Come on. You know what? I'm actually keep it at 8 ticks because this is the second trade. I only took this trade and this trade. I missed a couple of these good setups. So come on. One more tick here. We're bouncing on my exit order, but we need to, you need to push through the limit order. You need one more tick. So generally, you need one more tick. I would have been out on the 7 ticks. I probably should have gotten the 7, but let's see. I still like the momentum. 5-minute chart is confirmed, the big bullish bar. Let's see. There's a strong uptrend. I'm buying with the direction of a trend. You guys can see there's a micro break, new extreme, which tells me that the downtrend played out. All right, so I'm not longer looking for sells. EMA is holding price. Let's see here. We're halfway in. Come on. We're bouncing on max zero again, but we need to tick through here. And we got filled. So I'm going to instantly tighten my stop loss at the break-even position because I don't want to lose any money right now that I have on the table. So anything that happens right now is just a gravy. So this was the second trade for today. And let's see if we can make a good run. You guys can see the volatility slowed down. It's 2 days before Christmas, so nothing unexpected, but let's see if we can get a decent runner. And I'm gonna pause the video, let you guys see. Resume. Unfortunately, the runner got taken out. A price created a higher low, but right now EMA is completely flat in the middle of those bars, and this higher low is in the middle of this trending range. So I don't like taking a chance here on a higher low. Had it closed above EMA here, this would have been better, but you push below EMA, indicated bearish momentum, you close back above, not the cleanest entry. Once you have first leg, pullback, second leg to a new extreme. So you have 2 legs up, market consolidated. It is pushing lower. As I'm watching this, personally, I'm still not thinking about selling, okay? And by the way, this is the 5-minute chart. This is the trend line that I was referring to. This was the bounce here that told me that it's safer for me to go long. As you can see, there was a new extreme and there was a first entry long, pullback, second entry long, right where the higher low was. But this is looking great on a 5-minute chart, and you guys can see how nicely off the lows the geometrical formation is holding price nicely. But if I take a look on a 2000 tick chart, I'm really supposed to go long in the middle of this mess, which is not ideal. And after all day of watching this slow market, it is quite hard to pull the trigger here. As the market is pushing lower and you guys can see that the trend line is not holding at all and you have a strong momentum down, there's actually a trend line, could be something like this. It is reasonable for me to start looking for shorts because this is the new extreme and I have a first attempt to sell, I have a pullback, and I have a second attempt to sell. Not only that, you have a micro double top, double test of the EMA, a little tick higher, instant reversal. This is a great short entry. This is a long trap because people got long here going long below EMA. It instantly reversed and trapped everybody going long. So this is a great entry. I only see a first entry here. You were expecting for price to break this downtrend and create a new extreme. However, at this point on, we already moved quite a lot and I'm expecting a new high of this overall uptrend. It's okay to go short here. Why? Because the big patterns, the corrections take time. Okay, if you see a small pattern, it's most likely going to correct right away. But if you see big overall uptrend, the correction is going to be substantial. So this is why it's okay to take a temporary short, but you don't want to keep chasing the shorts because there's a possibility that you're going to make a new high based on a 5-minute channel that we saw as well. But as I'm looking at this, there's a possibility that the channel may, yeah, it could actually fit. Show me, let me see. The channel could be something like this. Yeah, this fits pretty good. And you don't really need, it fits, well, it fits off the top as well. Let me see the midline. Midline's looking good as well. So this is looking like a bigger channel and you don't need to know the exact formation of the uptrend. That's okay. Only thing you need to know is there is a bullish bias. You keep playing the short-term trend lines. You keep playing the EMA. You keep playing the micro channels. The overall pattern, if it's hard to find, is just for your information. It's just the guidelines that you grab and you hold on to a bullish bias. That's just a confirmation of a bullish bias. You don't have to be perfect, that you don't have the perfect trend line. That's completely okay. You keep drawing them and redrawing them as the day goes along. Nobody has a crystal ball for you to predict the perfect trend line. A lot of times you can predict it because it is a skill and it gets easier, but sometimes it is a little bit trickier and it takes a little bit development for price. All right, so we're continuing higher and this is the price action for today. So I'm going to wrap it up. I want to wish everybody Merry Christmas. I'm going to talk to you next time. Take care, buddy.